Your pension payment date is about to change, and if you're not prepared, it could throw your entire monthly budget into chaos. The Department for Work and Pensions has just announced a major shake-up that will affect millions of British pensioners starting next week. But here's what's really concerning. Many people haven't received any notification about these changes, and some could face unexpected delays in their payments. This isn't just another minor government adjustment. It's a fundamental change that could impact how you manage your monthly finances. When exactly will these changes take effect? How will they impact your payment schedule? What steps do you need to take to prepare? And most importantly, what happens if something goes wrong with your payment? Stay tuned, because I'm about to break down everything you need to know about this crucial DWP shake-up. Before we dive into these essential details, make sure you hit that subscribe button and turn on notifications. Let's start by addressing the elephant in the room. Why is the DWP making these changes now? The department has announced this shake-up as part of their ongoing modernization efforts to streamline payment systems and improve efficiency. While this might sound like typical government jargon, the implications for millions of pensioners are very real and immediate. The changes are set to roll out next week, marking one of the most significant adjustments to the pension payment system in recent years. This isn't just about moving dates around on a calendar. It's about fundamentally restructuring how and when millions of people receive their primary source of income. Understanding the current system is crucial before we delve into the changes. Currently, state pension payments are typically made every 4 weeks, with different people receiving their payments on different days based on their national insurance number. This system has been in place for years, and many pensioners have built their financial planning around these established dates. The new system, however, introduces several important changes. First and foremost, the payment dates will be realigned for many recipients. This means that the day of the month you're used to receiving your pension could change. For some, this might mean getting their payment a few days earlier, while others might see their payment date pushed back slightly. One of the most significant aspects of these changes is how they'll affect different groups of pensioners. Those who reached state pension age before April 2016 might experience different changes compared to those who reached pension age after this date. The DWP has stated that these variations are necessary to ensure a smoother transition to the new system. But here's something that many news outlets aren't talking about: the potential impact on those who receive other benefits alongside their state pension. If you're someone who receives pension credit, housing benefit, or other supplementary benefits, these changes could affect how your various payments align throughout the month. This is particularly important for budgeting and financial planning. Let's talk about the practical implications of these changes. For many pensioners, knowing exactly when their pension will arrive is crucial for managing bills, direct debits, and other regular payments. The transition period could be particularly challenging for those who have set up automatic payments based on the current pension payment dates. The DWP has put measures in place to handle this transition, but it's essential to understand what these are. They've established a dedicated helpline for pensioners who have concerns about the changes, and they're promising additional support for vulnerable individuals who might need extra assistance during this period. One aspect that's causing particular concern is the potential for payment delays during the transition. While the DWP assures that they've thoroughly tested the new system, any major change to payment systems carries some risk of technical issues. This is why it's crucial to be prepared and know exactly what to do if your payment doesn't arrive as expected. For those wondering about the specific actions they need to take, the good news is that most pensioners won't need to do anything actively. The changes will be implemented automatically by the DWP. However, there are several steps you can take to protect yourself during this transition period. First, it's essential to keep a close eye on your bank account around your usual payment date. Make a note of when your last payment arrived and when the next one is due. If you have any direct debits or standing orders set up, you might need to review these to ensure they align with your new payment date. The DWP has also emphasized the importance of keeping your contact details up to date. This ensures that if there are any issues with your payment, they can reach you quickly. If you've changed your phone number or email address recently, now is the time to update this information with the pension service. What's particularly interesting about these changes is how they fit into the broader picture of pension reform in the UK. This payment date shake-up is actually part of a larger modernization program aimed at making the pension system more efficient and cost-effective. Understanding this context helps explain why these changes are happening now. Let's address some common concerns that pensioners might have. One frequent question is whether these changes will affect the amount of pension received. The DWP has been clear that this is purely a change to payment dates. The amount you receive will remain the same. However, the timing of when you receive that money could affect your monthly budgeting. Another crucial aspect to consider is how these changes might affect those who manage finances for elderly relatives. If you help a family member with their pension arrangements, you'll need to be aware of these changes and possibly adjust any financial management systems you have in place. The banking sector has also been preparing for these changes. Many major banks are aware of the upcoming shift and have systems in place to handle any potential issues. However, it's still advisable to keep extra funds available during the transition period, just in case of any unexpected delays. Looking ahead, what can pensioners expect once these changes are fully implemented? The DWP promises that the new system will be more efficient and reliable in the long term. They suggest that once the initial transition period is complete, pensioners will benefit from a more streamlined and modern payment system. There's also the question of future changes. While this current shake-up is significant, it's likely part of an ongoing process of modernization. Staying informed about pension news and updates will become increasingly important as the system continues to evolve. For those who might experience difficulties during this transition, it's important to know where to seek help. Besides the DWP's dedicated helpline, organizations like Age UK and Citizens Advice are prepared to offer support and guidance. These services are free and can be invaluable if you encounter any issues. As we've discussed, these payment date changes are significant and will affect millions of pensioners across the UK. While the transition might cause some temporary disruption, being prepared and informed is key to managing these changes effectively. Remember, most pensioners won't need to take any direct action, but staying vigilant and knowing where to seek help if needed is crucial. If you found this information valuable, please don't forget to like and share this video with anyone who might be affected by these changes. Subscribe to our channel for more updates on pension news and changes that could affect your finances. Drop a comment below if you have any questions or concerns about the new payment dates. I'll do my best to respond to everyone.